Okay, today we are diving into a really high-stakes story, Scholar Rock. This is a biotech that is standing right on the verge of a massive, company-defining moment. The recent Q2 2025 earnings call was meant to set the stage, but the market's reaction, well, it wasn't exactly a round of applause.
Yeah, that's what the market thought. The stock dropped over 6% on the day of the call and on heavy volume too. So, what on earth happened here? You've got a company closer than it's ever been to getting its first drug approved, but clearly, something in the numbers and the operational updates really spooked investors. Let's break it all down.
So, to really get what's going on, you need to understand who Scholar Rock is. This is not some massive pharma giant, okay? They're a pre-revenue biotech. That means they're burning through cash to develop new drugs, all while hoping that one of them finally hits it big. And for Scholar Rock, that day might be just around the corner. Pretty much their entire future is riding on one drug, Apitegromab. It's a treatment for a really devastating neuromuscular disease called Spinal Muscular Atrophy, or SMA for short. With a final decision date from the FDA just weeks away, this isn't just another quarterly report for them. No way. This is the moment that could flip them from a development stage company into a full-blown commercial powerhouse. Okay, so back to that stock drop. Why the negativity? It really boils down to two big areas of concern that came out of the earnings call: the money and a potential hiccup in their manufacturing. Let's start with the financials. The first big red flag that jumped out to investors was the size of the earnings miss. I mean, it was significant. Wall Street was expecting a loss of around 66 cents per share, but the company came in with a loss of 98 cents. That's a 48% miss. For a company that isn't selling a single thing yet, you better believe investors scrutinize every single dollar of cash they're burning. And when you dig into the details, you can see exactly where that miss came from. The net loss ballooned to $110 million. Now, a 47% jump in R&D, that's kind of expected when you're this close to an approval, but it's the general and administrative expenses, the G&A line, that really pops, up a staggering 191% year over year. Management explained this was due to some leadership transition costs and, more importantly, the cost of building out a sales team for the potential launch. But the cash burn was really only half the story. The thing that worried many investors even more was an operational issue, a potential roadblock that came up on the call, just weeks before that final FDA decision. And this is the critical part. The FDA inspected two of Scholar Rock's manufacturing partners and found some issues. One of those sites is the key Catalent facility in Indiana, which handles the final fill-finish step. That's literally getting the drug into the vials. Any problem here at this late stage could potentially delay the FDA's decision, which has a hard deadline, the PDUFA date of September 22nd. A delay would be a huge blow. But despite those very real risks, there's a good reason this stock is up over 270% in the last year. That peril we just talked about is balanced by an absolutely immense promise. So let's flip the script and look at the bull case. See, Apitegromab isn't just another drug for SMA. It's designed to be a first-in-class therapy. It works in a totally new way. Instead of just targeting the genetic root of the disease like current drugs, it directly targets muscles to increase their strength. The whole idea is for patients to use it on top of their existing therapy. It's a completely new approach. And here's why that is such a big deal. According to a recent survey from the patient group Cure SMA, even with all the current treatments out there, a whopping 90% of patients say their number one unmet need is gaining muscle strength. Apitegromab is designed to solve that exact problem. It suggests there's a massive ready-made market just waiting for it. And if you look ahead, the road is just packed with potential catalysts. Of course, the huge one is that September 22nd PDUFA date, the FDA's big decision day. But right on its heels, you have a filing for their next drug, SRK 439, and then a potential European approval in mid-2026. This shows it's not just a one-trick pony. This could be the start of a whole new pipeline. And the story gets even bigger than SMA. A recent study called Embrace showed that when apitegromab was combined with a popular weight loss drug, it helped patients hold on to about 4.2 pounds of lean muscle. This is huge. It hints that this technology could be a whole platform for the massive cardiometabolic market, helping people preserve muscle quality while they lose weight.
So you've got this fascinating tension, right? The peril of the cash burn and the manufacturing risk versus the incredible promise of a blockbuster drug and a platform technology. So how did management handle this on the call?
Well, it was a classic narrative battle. Management's tone was calm, cool, and collected. They kept stressing that FDA inspections are standard procedure, that their conversations with the agency are constructive, and, this is key, that their launch supply is already made and ready to ship. But investors, of course, are weighing that against the real risk of a delay, the known issues at that Catalent site, and that high cash burn we already talked about.
So which side is going to win out, the peril or the promise? That brings us to our final verdict.
So what's the call on Scholar Rock? Let's lay out what you need to be watching for.
First, and most obviously, is that PDUFA outcome. The key here is a clean, on-time approval with a broad label, meaning it can be used for most patients. Anything less will be seen as a disappointment. After that, all eyes will shift to the launch itself. How quickly do doctors start prescribing it, and will insurance companies agree to pay for it? And finally, you'll want to watch for any news on the rest of their pipeline, which would help validate that bigger, long-term story. So what do we think this stock will do? Our prediction here is pretty straightforward. Expect a roller coaster. This stock is going to be incredibly volatile heading into that September 22nd date. It's a classic binary event. A delay or rejection would obviously be very painful, but a clean, on-time approval could unlock a major re-rating of the stock to the upside. We're talking substantial upside. And so, given that balance of risk and reward, our call here at Talk Tickers on Scholar Rock is an outperform rating. And here's why. First, you just can't ignore the blockbuster potential of Apitegromab. A first-in-class therapy is a massive catalyst. Second, that unmet need we talked about isn't just some theory. It is a clear and compelling demand straight from the patient community. Third, while those manufacturing risks are real, we believe they seem manageable. And after the recent stock drop, a lot of that risk is probably already priced in. And finally, with a cash runway all the way into 2027, the company has a solid financial cushion to execute this launch and weather any near-term storms. Ultimately, Scholar Rock is a classic high-stakes biotech play. You've got significant near-term risk, but for a potentially transformative reward. That September 22nd decision is going to be their moment of truth. And as always, this is not financial advice. Please be sure to do your own research.